Well, perhaps we can start with some introductions, Sophie. Would you like to introduce yourself?
Yeah, absolutely. So my name is Sophie Mekjen, and I am an employee at Start Engine. I've been here for about 2 years now. I am both an account executive and a licensed securities broker. So I have Series 7 and Series 63 licenses, and I, as well as the entire team at Start Engine, help founders to use equity crowdfunding to raise capital for their businesses.
Excellent. So perhaps we could start there. Sophie, could you tell our audience what is equity crowdfunding?
Yep. So it's a newer industry within the overall financing world. Specifically, Regulation Crowdfunding and Regulation A Plus were signed in under the Jobs Act in 2012. And then the regulations themselves were actually written and put live in, I believe, 2015 for Regulation A Plus and 2016 for Reg CF, short for, again, Regulation Crowdfunding. So both of those regulations are the SEC exemptions that allow companies to raise capital from accredited and non-accredited investors in the same round while remaining a private company. So this is really the first time that companies have been able to include a large number of non-accredited investors or typical everyday retail investors into their raise while also remaining a private company. Regulation crowdfunding specifically is the one that most companies will start with. Much faster and easier regulation to work under, comparatively speaking, and it allows you to raise up to $5 million. Regulation A plus, on the flip side, is usually more like a 3 to 5 month process to get a campaign set up. You do have to be qualified by the SEC, but then you can raise up to 75 million.
Hmm, very interesting. So it's a fairly new concept that companies are able to raise, stay private, but raise from your normal everyday sort of consumer to invest in equity in your company.
Yes. So on our platform specifically, companies are usually doing priced rounds, either common or preferred shares. They don't typically offer voting rights or board seats through our platform because, as you can imagine, if you had a very large influx of investors and a very large influx of votes as well, that could make things really complicated very quickly. So
Oh
that's
yeah.
one of the ways that we've tailored our platform or our fundraising structure to help make founders' lives a bit easier while also giving the public access to those raises.
So basically, when investors, actually, my next question is who are the investors? But real quick, so the investors, when they all invest, right? Maybe you have like hundreds or thousands of investors even investing. It's just treated to the founder as just one investor.
Sort of. The way that we've structured it is we have a bunch of services and teams in-house that handle the investors coming in. So Start Engine has an in-house transfer agent that is handling the essentially the record keeping of all of the investors. And then our in-house investor services team is helping to handle investor questions in regards to anything like how many shares do I own, or where can I find confirmation of my investment, those types of questions as their investment is being processed. So we help handle all of that record keeping and the work of managing the incoming investments. What Start Engine is currently building out is a custody solution. So we essentially have worked up until now to take the work off of founders' plates in managing investors as much as we can. And now what we're focusing on is to help make the cap tables more streamlined and just visually a little bit more
Hmm.
pleasing. Nothing changes on the workload front, but the way that we've handled the visual change on the cap table is Start Engine recently got approved to be a carrying broker dealer. So we're now able to start carrying investor securities and funds in-house. So what that allows us to do is to actually hold their shares under Start Engine's name when they make one of these investment or brokerage accounts with Start Engine. So
Very
the way
cool.
that that
So,
works,
so,
yeah, the
so, so
same
maybe
way
we
that
could
you
back
could
up a
buy,
little bit for folks.
yeah, of course.
How does Start Engine help startups crowdfund? And who are currently the investors, right? To our startup founders who are typically used to the VCs, to angel investors, large check sizes, who invests in Start Engine startups and who can?
So anybody in the general public over the age of 18 is eligible to invest. For Start Engine specifically, we have the option during onboarding to choose if you would like to allow for international investors to participate as well. So that is optional with our platform, but essentially the raise is open to the general public so long as you're setting up a regulation crowdfunding campaign. And that's how we have the ability to include both accredited and non accredited or retail investors in the same round.
Absolutely. And so I wanted to get on the topic of our current economy and how things have changed and how it's really shown a spotlight on equity crowdfunding platforms such as yours. We've been interviewing a bunch of startup founders. This is, the last meetup in our series of the economic downturn series and how it's been affecting our founders, founder community. We all understand so far VC funding has gone down the past few months because VCs themselves are struggling to fundraise during the economic downturn. Lots of uncertainty and the war and COVID supply chain backups. So how has equity crowdfunding been performing? Separate from how VC funding is performing. How's equity crowdfunding performing during this time? What does the data tell us, Sophie?
So our industry is still on track for its best year in history. Start Engine's platform alone is still up over last year. Investments have increased. I believe it's about 12.5% year to date so far. So obviously we would love for it to be as much as possible, but given the circumstances, seeing our industry and even our investor base having grown about 33% year to date over last year is a really positive sign that our industry doesn't follow those same macroeconomic trends. And I would say a lot of that likely has to do with the time horizon of an investment like this, given the fact that investors are expecting to see returns in anywhere from 2 to 10 years when they're investing in a very early stage company. Likely by the time a company gets to that point, 2 to 10 years down the line, hopefully our markets have normalized a bit more by then. But there's some very interesting articles published recently by sources such as TechCrunch that talk about the fact that equity crowdfunding appears to be completely unfazed by what's happening in the markets, which is
Huh.
again a very good sign for the resilience.
So I'd love to dive into that. Perhaps, there's only so much we can draw from the data, but, any sort of insight since you work, deep in the trenches of equity crowdfunding, working with founders, working with the investors. Why is that? Why is equity crowdfunding, still going strong? And, with the uncertainty, coming up in the next 6 months or 18 months, um, you mentioned there's some differences in the investor mentality. There's differences in expectations. Could you elaborate on that?
Yeah, so I would say I think 2020, the year of 2020 as a whole was a very good example of equity crowdfunding comparatively to the traditional markets because in 2020, as we remember, the
Mhm.
market turned into a bit of a mess. And our platform saw its best year of growth that year. That was the year that we officially hit, I believe, about $150 million raised in a single year. And a lot of our companies were seeing great success on our platform. And I think one of the pieces is that when markets get rocky, a lot of those traditional investment sources start drying up. So founders start running out of options because typical VC paths or angel groups are no longer looking to make investments because they are feeling less certain about where the markets are going. So that leaves very, really high quality companies looking for places to continue raising. And then on the investor side, they're looking for alternatives to markets that are incredibly up and down or um, really changing rapidly. And so that's where we created a very nice meeting place for retail investors and companies who are looking to raise. And then with this year, again, I know that the circumstances are substantially different from 2020 having a full kind of recession coming into play. So we have a much different set of circumstances, but even still, we're seeing that our platform is outperforming what we did last year. And last year alone, we brought in
That's
about a
incredible.
quarter of a billion dollars through our companies that we're raising.
Mm. Yeah, that's really good raises. And you all, so Start Engine's business model, you all make money when the startup founders make investment, right? So that's just an indicator of how much the startup founders are able to raise, which I think is incredible.
Yeah, so on our platform, last year alone, we brought in $252 million for our companies. So the total amount of funding that we were able to generate was about $100 million more than it was even in 2020. And then again, year to date, we're doing up more than we did last year. So the growth has been less extreme than it was between 2020 and 2021, but still in the positives, which is really, again, promising given the overall state of the industry.
Mm. I got it. So let's say, we have some founders here, they're interested in exploring equity crowdfunding as an option. Greater access to more investors. Investors can invest in more different varying amounts, and folks who may not have been able to invest in your company before can now invest. It's a great opportunity. What are some learnings and pitfalls, even that you've observed in your experience working with founders? What should our founders know before getting into equity crowdfunding on preparation, how to design their pitch, marketing strategy, how to think about valuation, how to think about the timeline of crowdfunding? There's a lot of different
Mhm.
topics, so we can step through them, one by one. But yeah, what are some things that you learned in your experience with the founders?
So, Start Engine specifically focuses pretty heavily on services because we understand that most people coming to us have not done an equity crowdfunding raise before. But there's a couple of ways specifically that equity crowdfunding is very different from a more traditional round. So, first and foremost, traditional rounds, you obviously have less control over the terms because you're sitting across the negotiation table from somebody who might have a little bit more say in the overall terms of the raise, but you're also likely going to get strategic guidance out of a traditional round. With equity crowdfunding, on the other hand, you aren't going to receive that same type of strategic guidance because these investors are much more arm's length distance from the company, given that they don't have voting rights, they don't have board seats. But with that, you're also able to stay in control of the business and have more control over your terms, and also build this community of people who don't typically have access to invest. But once somebody owns shares in your company, they still want to help support however they can. So a lot of our companies have reported to us that they have things like increases in revenue once they have all of these investors advertising for, or almost being a brand ambassador for the company. Or
Yes.
sometimes even Start Engine ourselves has we've raised through our own platform, and a lot of times our own shareholders will do things like beta test new features or help us get PR on different trending topics in the industry. So a very much strength in numbers focus on growing the company, but a lot of the setup will take that into account. And so during the onboarding process, onboarding.
Before we get into that, I want to deep dive into those investors
Yeah.
and that marketing opportunity as well. So yeah, I mean, as a founder,
Mhm.
we've felt that effect every time we onboard a new investor, right? There's a lot of energy. They have their own resources. They have their own community. And we love to just partner with them and work with them and get their feedback on our product. And a lot of good comes out of that. Now imagine, multiply that by hundreds of investors. So I guess the
Yeah.
other interesting thing I'd like to know as a founder is these investors, are they do they work in the tech field? Are they software engineers? Are they like directors or VPs or managers? Are they, founders and entrepreneurs themselves? Do we have any information on like, who invests?
Yeah, so it's all of the above. And I would say the overall volume of investors or where they're coming from can vary heavily based on the company that we're raising for.
Hmm?
So, as an example, a company in the alcohol industry who's going out to their customer list is likely going to have a very different community than a robotics company or a company in the med tech space that's going out to their network of people from med school. So obviously
And,
the community can really skew from one company to the next.
yeah, no, you brought up two really great points. You with equity crowdfunding, you can go to your customers, right, and have your customers
Yes.
or individuals invest in your company. That further strengthens your relationship, or it might be a great way to start a relationship with a new customer. And also, that creates a community. We all know, right? A community, they're your brand ambassadors, they're your marketing, they're your word of mouth, which is so important
Hmm.
to new entrepreneurs. So yeah, that's a really really good point. That sort of uh, exposure, that visibility effect. Um,
Yeah,
could you tell
absolutely.
us a little? Yeah, you were getting into the process, maybe the pitching, the marketing strategy.
Yeah, so during the onboarding process for a Reg CF raise, regulation crowdfunding being that raise where you can raise up to $5 million, that one has a much more streamlined onboarding process. So it typically takes about 6 weeks. What you're doing during that time is working with our onboarding team to put together, first and foremost, the offering document. And then in the background of that process, we build out the campaign page. So in the offering document, it's specifically called the Form C for a Reg CF raise. That offering document is where you specify the terms of the offering. So you can choose common or preferred shares. You can specify the intended use of funds, add information on the team, all of that information that typically is going into a offering document for a raise. One thing to note is that to go into the offering document, you do need to have financials prepared. Companies usually will work on this in parallel with onboarding. But within regulation crowdfunding, to raise up to $5 million, you do need an audit of the past 2 fiscal years. Or if you aren't looking for the full 5 million, there is an exemption if you're raising up to 1.07 million in your first Reg CF campaign. You can do that with a CPA review of your financials. So that tends to be a faster and cheaper way to get started if companies are looking to try out regulation crowdfunding for the first time. And then
Mm.
in parallel with that, we're helping to put together the offering document. And then again, last but not least, we are building out that campaign page that looks kind of like a broken out pitch deck, but is essentially the landing page on our site for the raise. Very last piece of the puzzle for onboarding is that our in-house compliance team reviews all of those materials with a fine tooth comb. And then they can provide comments back to each company as they're reviewing if they think something needs a source stated, or if something is stated in a way that's misleading, we can help catch some of those things to make sure everything's buttoned up before we file with the SEC.
Yeah, no, I'm glad to hear that. It sounds like you and your team work really hand in hand with the founders, right? Because this is, new for a lot of founders, and there are, legal documents. But it sounds like you all just have a process for, here's step one, here's step two. You just go through the steps with the team, right? Even with like building the pitch and building the campaign page, that's really awesome. What should founders expect in terms of timeline, right? Founders will say, oh, we're going to do a fundraising round. Here's how much time, resources we're going to allocate to it. What does the timeline look like for equity crowdfunding?
So once a campaign launches, we set the length at 90 days, but we have the option to extend for 60 days if a company would like to continue raising. I would say that's typically enough for companies that are doing a call it $1 to $5 million raise. When companies are doing one of those larger Reg A plus campaigns, and as an example, we've had companies raise 20 to $25 million. That's where a campaign can take anywhere from 6 to 12 months to hit some of those fundraising goals. But a lot of the determiner of the speed of the round is going to be momentum coming in. So if you have a strong community or investors that are kind of waiting in the wings for a chance to invest in the company, that obviously is going to get a much faster start and pick up the momentum very quickly. Conversely, if a company doesn't have that same community early at the beginning, oftentimes those companies will lean more so into marketing to help boost the momentum of the campaign. Marketing is a very effective tool. It tends to be a bit less effective for the first 100 or $200,000 raised because in the earliest stages of the campaign, the conversion rate isn't quite as good. So we do recommend having community that you're willing to go out to about the round. But then marketing above and beyond the initial community is a really helpful way to continue growing the overall size of the campaign.
Yeah, no, absolutely. I think there's a reason why, a lot of founders call this like a community round, right? It's crowd funding. It's from the
Hmm.
community. The way I think about it, and Sophie, correct me if I'm wrong, the way I think about it is the mentality and is very similar to traditional fundraising in that I need to build momentum. I need to have developed relationships with investors beforehand, right? And maybe go to my past advisors, maybe go to folks that we've had investment talks about, maybe go to our investment network that we've built up over the years, right? It's these things I think are similar, right? These strategies. And yeah, like you said, any sort of campaign. And what's even more important is, even with traditional investor fundraising, they ask you how much have you raised already, right? Who are
Hmm.
your lead investors, right? It's the same mentality here on the equity crowdfunding campaign page. They want to know, oh, how much have you raised, right? What's the momentum? Who else has bought in? That, understanding that investor mentality and understanding that's important. Seeing momentum, seeing traction is important to them. Yeah, I think is a key thing that for founders to keep in mind. Um, Yeah, so
Absolutely.
Sophie, last question, and then we'll get into Q&A. And folks, if you want to do Q&A, go ahead and line up over here by the stairs. We'll get your questions right in. But so, Sophie, if you could leave our founders with one takeaway, what would it be?
So, equity crowdfunding as an industry has grown exponentially over the last few years, and especially since the pandemic has
Really changed the fundraising industry. We've really seen a lot of growth, and it's really increased the viability of this as a fundraising tool for founders. So I think in the very earliest stages of equity crowdfunding, this was something that people were trying out, but now that platforms like Start Engine are raising over $250 million a year, the viability is really there, and the benefits of being able to stay in control of your company as you scale is a very attractive tool for founders to use. So, my recommendation would be to focus on building your community of both customers and network as you keep growing. And then equity crowdfunding can be a very effective tool to use not once, but just to continue even coming back to over and over again as you'd like to continue raising as much as 75.
Sophie, I think the microphone might have cut out at the very end, but I think we got yeah what you were saying. And I'd like to ask the audience if you have any questions for Q&A, please come on, line up on the side of the stage. But let's Sophie, are you still with us?
Yes, I can hear you just
Yes,
fine.
welcome back. Awesome, awesome. Yeah, hit our one keys. Please a round of applause for our speaker today, Sophie. Thank you so much, Sophie.
Of course.
Right. Any questions? No dumb questions, no wrong questions. Any entrepreneurs or any prospective entrepreneurs? I would think equity crowdfunding is a great option, not only for existing founders but for new founders as well. Because building a community, right? A friend network, work network. Uh,
Mhm.
that's it just opens the door to so many people. What's the best way to reach out to you?
Email is Sophie, Sophie, at startengine.com. START engine.com. So basically, the email is the best way to get in touch, or if anybody adds me on LinkedIn, I'm also happy to send you over my email address there.
Awesome. Thank you so much, Sophie. All right.
Yeah, of course. Thank you for having me. And we can discuss your fundraising options, and then that way you'd have as much information as you'd like about Start Engine to keep us in the mix. But yeah, I appreciate you saying hello.
Okay, great. Nice to meet you. I will connect with you through LinkedIn or email, and if I think of something more specific, I will run up to you again.
Perfect. Thank you.